Does OPEC need this coronavirus situation resolved, and what is it willing to do about it?
Well, of course, they would like the situation resolved, given the kind of demand impact we are looking at. We think Q1 global oil demand is going to be down year on year by 1.2 million barrels per day. That's the steepest decline since 2008-2009 crisis. They are very, very aware of the need for action. I think the numbers being talked about are deeper cuts, of course, for Q2, potentially even longer, 600,000 barrels per day or even up to million. Those are the numbers being talked about. We do think they will deliver a big cut. But I think the one or the most important thing for us is to realize that OPEC and Saudi Arabia in particular realize that, look, this isn't about delivering a short-term upside to prices, even if they cut a big number. This is about maintaining inventories at a more or less reasonable level through the second quarter so that once demand does pick up in the third quarter, prices can rally. So this is very much about guaranteeing that future upside in oil prices rather than delivering a short-term quick upside to oil prices.
Amrita, I'm curious, with China coming back online, how much demand would you expect over the coming months to add per day from China?
I mean, some of the numbers being talked about in China are that demand fell by 50%. We don't think it was that steep when you take everything into account. But in terms of normalization, we think right now Chinese demand is about 60% of, say, what it was this time last year. April, we have 80% normalization. And then by May, again, assuming there is not another outbreak, things go back to normalcy. So pretty much on a month-on-month basis, you're talking about 1 million barrels per day month-on-month increase, and then a 2 million barrels per day by April into May.
All right, Amrita, we've just got about a minute left here. Let's talk about how the U.S. shale producers are being impacted by those lower oil prices. Is there an impact right now? Is there more stress on U.S. producers because of the steep slide that we've seen in U.S.-based oil prices?
Oh, absolutely. And we've put out a note recently kind of highlighting this, that there's a lot of downside risk to our production numbers, which are about 600,000 barrels per day of crude production growth from the U.S. But the biggest issue right now is they are far more exposed to the downside in prices, given how weak gas prices are, natural gas prices and NGLs prices. They are really struggling. The credit market is completely closed, and just general lending has been very, very tight. And you will see more bankruptcies in the shale patch. You've already started to see some companies leave certain acreages. There are downgrades coming through on production profile, particularly for 2021. That's what you need to watch. We could actually get U.S. production down year on year for the first time. That would be in over a decade. So I think that's the one to watch out for.